Okay, so good day everyone, and welcome to our weekly market outlook class. Today we're going to be looking at some opportunities that could present itself for us for the week and how we can basically approach the market. And then I would also talk a little bit about some basically best practices that would help you as a trader, at least from my own experience, to be able to be consistent in terms of to be able to be profitable, right? We all know that everybody here has some experience trading. Some are better than others, but we all have experience trading. You all know that you can make a lot of money from the forex markets. You also know that you can make losses. Now, what happens most of the time is when you're right and you make money, you don't make as much. But when you're wrong, you lose a lot. That is the problem that majority of people lose is they know they can make money from the forex markets, but then they tend to lose more than they gain. And most of the time it's actually down to greed, psychology, and some other factors. I'll try and touch a bit on them. But first, let's jump straight into our weekly market outlook. Let's go to forexfactory.com and look, basically see some of the news reports that we could anticipate for the week. So last week, Friday, we had the NFP. And I'm sure a lot of people made profits trading that. And I'm sure a lot of people lost a lot of money as well. Like, I don't trade the news. I can see a lot of noises. People make lots of noise about trading news and all. And as long as you can find a way to trade successfully, good. What I figured is, at least for me personally, based on the way and the type of trader I am, I don't like the uncertainty, right? If I will be positioned in the market because of the technical, basically because of price analysis. If the news comes out, it's fine. But I wouldn't look to take a trade because of the news reports. I don't see that. That is more like flipping a coin and hoping for the best, in my opinion. Yeah, you can find a way to add technicality to it, which I'm sure some of you and some people do. But for me, I prefer to trade with low tempo and without having to try and run the volatility or to take advantage of those moves because of the news reports, which, remember, you can also always take advantage of the news reports if you're positioned in the right way and the market flows your way. Okay. So from Monday to Thursday, from Monday to starts today and till Wednesday, there are not a lot of news with the exception of the CPI report. You could see it's mostly yellow or low impact news. On today being Monday, you could see almost nothing is happening. There's the bank holiday in UK. That's because of the coronation of the king. So today's the bank holiday. There's also French bank holiday in the Euro. So not many activities in terms of high impact news. And then on Tuesday, we have the same similar type approach, mostly yellow news. And then on Wednesday, we have the elephant in the room, which is the CPI report, which will be coming up by 1:30 p.m. on Wednesday. A lot of basically volatility. Market is expecting it to come out at 0.4. Previously, it was 0.1. I will see what it comes out at. And then the also CPI-YY is expected to come out at 5.0, which was previously 5.0. So it's expected to basically stay the same. So this is the basically change in price of goods and services as purchased by customers. Now, and then on Thursday, that's where we now start to have some high impact news from the pound and from the US. So we have the monetary report and monetary bank rates. And then there's also the official bank rate. So what would the interest rates be? It was 4.25 and it's expected to go up to 4.5. We'll see if it comes out at that. And then there's also the core PPI and the PPI-MM, as well as unemployment claims from the US. So not a lot, at least Monday to Wednesday, basically is going to just be pure technicals. No stupid volatility, to just be pure market movements and no injection of news reports. Okay, and then that's about how we wrap up the week as regards the news. Now I'll jump over back to the chat because the news is not very interesting. I just always like to highlight it so you can have those pointers in mind when you're looking for those opportunities. So we're going to start off by looking at, let us start off by looking at the DXY. Okay, so remember the DXY is the dollar index. It measures the strength of the dollar against other baskets. Now, many of you obviously, if you're watching this on the YouTube channel, you'd also remember I highlighted this point. I made mention of the fact that at the time price was around here, that we're most likely going to see price basically drop down here. That means the dollar would weaken. Now, it has actually topped tapped into that region. So the dollar has been weak relatively, at least in terms of overall strength. And basically, I'm still expecting further weakness. You can see I still have these areas highlighted. So for the week, now we've tapped into here. What we see? We have a small rejection, but nothing really fancy. I believe we would see this blue past. That means we could see the dollar even lose some ground. Now, just because the dollar loses ground doesn't necessarily mean that it will lose ground against all pairs. So for example, remember in USDCAD, we are looking to buy, right? And USDCAD, if we're buying USDCAD, it means we're buying the dollar and we're selling the CAD. The CAD is not that very strong. We did see, so this was the basically NFP that caused this big candle here, right? And so now we are down here. Now, what you'd see, like I told you, I am still looking for the same thing. Now, remember, that just like we discussed, we're looking for buys up to this point. That's the area I'm interested in buying from. Why price was back here. We did get into some very good positions. I sense, many of you know that I bought all across here, right? I took out most of my profit around here and just filled the rest. I think when price made this big candle here, I moved my stop loss to just that low. And then this is where I was exited from the market. That was on Friday. I totally got out of the market on this one. And basically, I'm just waiting for another setup, right, to get involved buying. Overall, I am still looking for, buy opportunities to this area. So notice that even though, now here's the thing, right? Even if price, let me do this. Even if price comes down and just keeps going down, notice what we've done already. I have already made money on this move, right? We've already made quite a ton of money on this move up because we plan our trade. And then we understand that the market doesn't exactly have to do what we want when we want. We manage our trade, which is always why I say always trade proper risk management. You can always trade, appropriate risk management and basically manage your trade as price moves. But you could see that price came from this low. It took out this high and made a new high here. So as far as I'm concerned, all this, you see this red area now, right? I think I should expand it a little. So you see this red area here down to this point. All I'm doing is look for opportunities to buy. All I'm looking for are opportunities to buy. I sent out something on USDCAD on the Telegram group earlier. And, all through this area, all I'm interested in is in buy opportunities because why? You could see, first of all, if I zoom out a little, you'd see that the market is bullish. So we're in a bullish market on a long term. An intermediate structure, you can see that we broke out bullish again here, right? Now, basically, the reason we started buying from here was we broke out bullish here and we pulled back down and we got involved and now we broke out bullish here. So basically, we are, at least I am, still looking for opportunities to get involved as a buyer because I understand that as long as price does not close below this low here, I am very much interested in looking for buys up until this highs, and finally this high. So this is basically potential reward to potential risk, right? So you see the way we are approaching approaching trading in a systematic manner. We're not approaching it in such a way that I must make money. It's about the probability of, okay, if certain criteria are met and the trade fits into your system, it fits into your basically what you're looking at, then you can look to trade that with proper risk management. Now, some of you can decide to take this trade from where it is and, just take the trade from where it is, put your stop loss below this low and target this high. Now, that would be a very good trade in terms of risk to reward. You'd see that your risk is actually quite small as regards to your potential reward. And well, that would not be a bad way of approaching it. So let me put this here. Right, so if you're looking to swing trade this, you can look to get involved something like this. You would want to obviously take partial as price move your way. You definitely want to take some partial profit around here if and when price gets there. Now, remember, the negation of this entire outlook is if price closes the day below here. I don't mean a candle wick. You know, if the market closes the day below this low, then I'll probably stay back and basically just assess what to do next with regards to this one. But for right now, all I'm interested in is in buying opportunities. Okay, so now let's break down a little bit. Let's go down to the 1 hour chart, right? So you could see, let's see if you can even refine the entries here. Now, some of you who look to do trend lines, you could just pull out a, you could have a trend line like so, and watch for the break of it, which would also be a valid criteria. You could also just basically ask yourself, what is the low? Where is it? What is the high and where is the low coming from? So essentially, you could see price making lower lows, lower highs, right? Lower lows, lower highs, lower high, lower low, lower high, lower low, lower high, and lower low. So basically what you want to see is for price to maybe start to make a higher high, right? This is what we call is breaking structure. And then you can now start to look for those buys to take you higher. Now that's the patience, that's one way. You can also get involved from current price, just buy if the important point is define the risk, accept the risk. So you ask yourself, from current price to where I would like to put my stop loss, how many pips is that? Well, in this particular case now, it's what? It's like, let's see. It's like, 32 pips. And like, okay, 32 pips. That means if I use a standard lot, I lose $320. Am I okay losing $320? Well, if your account is sizable, let's say you have a 10K account, not even a 10K, let's say you even have more, right? You have a 20K account and you risk 2% of 20K is how much? $400, right? And then you can like, okay, it meets my risk criteria. So you're going to have to pick what fits your criteria. Don't take trade based on what you are looking to get. The problem most of the time is people open trades and they use lot size based on what they are looking to get. That, oh, if this thing goes my way, I will make 100 pips and I'll make $1,000. But then they totally ignore what happens when it doesn't go their way. And that's why, somebody with a small account size would lose a good portion of the trade, a good portion of the account size, because they decide to use incredibly high lot size. Now it could pay off, it could if it goes your way, you're happy, you're excited. However, when it doesn't, you find yourself struggling, and this is one thing you want to avoid. When you're right, you want to be a lot right, but when you're wrong, you want to be a little bit wrong. So approaching it in this way would help you basically stay longer in the game. So USDCAD, I'm looking for buys on this one, interested in buys only, unless I see a daily close below this low, in which case I would just basically, I wouldn't start to look, even if the price close below there, I won't look for sales. I'll just stay back and assess the market and then figure out what next to do, right? So, but for now, from where it is, I am, very interested in buy opportunities. I'm still looking for price to go back to the same areas that we initially targeted and take out those highs. And as it's going our way, I'll still be looking for continuous buy opportunities on this one, because that's how the market tends to flow. Okay, so now that's our analysis on USDCAD. I wanted to spend a little bit of time on USDCAD because I quite like the setup, and it's something that could very, very much play out this week. I expect if it's really going to, like, if price is really interested in going up, it will decide that today, not even this week. It will make that decision. At least it will begin to show its hands today. It very well could not, might not decide to explode today, but if it closes below this low here, then we already have our answers. Otherwise, if buyers defend that level, and then we could get the answers, basically get the insight into what we're looking for, and then look to play out that move. Okay. So now let's jump over to another pair which I also highlighted, USDJPY. So USDJPY, I think I sent out a trade signal on this one on the Telegram channel. I think it was last week. I can't remember, Thursday or Tuesday or something like that. And price has is already, this is basically kind of the USDCAD setup, right? So price tapped into the area I'm interested in, and then begin to push away. I got involved in this trade on one of my accounts. I am currently in this position, still looking to take price all the way up here. Now you see, in terms of risk to reward, we're looking at now already. I'm already in profit in this trade. I've already closed out a good portion, is a part of the trade, and my stop loss is now at break even. So even if price comes down and hits me and take me out, I would have made profits, even though, right? Now remember, we're looking for price to go up here. But even if price just comes here and goes down, I would have still made, I would still have made profit on this trade. This is basically what view trading looks like. You're not trading, or you don't open positions with the idea that price must certainly go a certain way. You plan your trade, and then if the market gives you the conditions that meets your criteria, you execute your plans. Sometimes you make a loss, sometimes you make break even, and the other times you make very, very good profit. So USDJPY, I'm looking for buys, still looking for buys on this one. I'm already positioned on the buy, and I'll just be looking for continuation basically in this movement up, right? So if you're looking to get involved, there probably is a chance price comes back down to filling this imbalance here, but if it really wants to go up, I doubt it will do that. So basically what we could see is price will take out this high and then maybe pull back and then I'll just keep taking out highs. We could get subtle break, but then maybe a continuation. But all I'm looking for here is for the price to continue to go up. If it doesn't, would also look to manage that. If it pulls back down, I will look for another opportunity to re-enter. So if price, let's see, so if price pulls back down, let me look at this on the 4-hour chart. Yeah, so if price pulls back down to, let's say, previous areas like this, I will be interested in, so previous areas like this, I will be interested in still looking for buying opportunities on this one, okay? So let's look at Euro CHF. So Euro CHF, I'm also looking at this, and basically you could see, I don't need to explain so much. This is my outlook. I'm looking for a buy trade. Hopefully see maybe price drops back down here. If we get this deep retracement, I will be interested in buying. If we don't get the retracements, if we get any other setup that I like, I'll probably look to get involved. But more for right now, I'm just sitting on the fence, waiting for this pullback. Now, here is one thing you don't want to do. I know a lot of people say, oh, if he's expecting price to come down here before going up, then I'm going to sell this so that I will make profit as it's coming down and then make profit as it's going up. Well, don't do that. Yeah, it could work. You could make profit if price decides to come down. But the point is, if you already have an overall direction, look to trade in that direction. You can see we had this break of structure here. If you look at the daily chart, so let's quickly look at the daily chart, you'll see that yeah, this market is not the cleanest in terms of bullishness, but you could see that overall we from this low here, from making this low here down here, you could see how price has begun to clear highs. Now, this was the previous low that price used to make this high, and then price came back down to make this low. So essentially, overall, I'm actually looking for price to come back to these highs, but I'm targeting the intermediary highs because as long as price stays above this low here, there's a good chance that price is going to come out and take out this high. So that's basically the outlook, and which is why I've just been waiting, right? I've been waiting for price to begin to break higher to begin to see if I can get confirmation to buy. Actually, I'm trying to get involved in a buy here. I think I ended up with a break even at that one. And then now I'm waiting for another setup to probably look for buy. So USDCAD, Euro USD, Euro CHF. I quite like the look of those pairs. Okay, so I'm not going to go and overview all the instruments here. I don't do that on weekly market outlook classes. I will do that on the cutting edge classes tomorrow and on Wednesday as well. So to get more depth, in case you're here and you've not joined the Telegram channel, please ensure to do so. We try to look at several instruments during the week, live chats, live classes, and I also tend to send out trade ideas. Now, GBPNZD, I actually tried to look for a sell opportunity, sorry, a buy opportunity on this one. I think that one ended up with a loss. So I ended up, it closed me out for a loss. I think my entry was based on the 5-minute time frame. So there was a break of structure within here. You can see, so I started looking for buy opportunity the moment price entered the area I'm interested in. So within this red zone here, all I'm interested in looking for buy opportunity. And like I tend to mention to you guys, within this area, I might take, a total of 5 trades, right? So this is one, maybe price comes down, give me another entry, I take that, it takes me out for a loss. Maybe it goes up, I enter, maybe it goes to break even, and then maybe eventually I catch a trade that runs. So I might take a total of 5 trades and end up with 2 wins. But those wins, when I'm wrong, I might lose 1%. When I'm right, probably end up making 10, 20, maybe 8%. And the one win will more than cover for those losses. It's this style of trading ensures that you're not overly committed to any particular position. You don't want to over leverage your account on one position. Now, somebody, let's say this is a protected low I'm looking to hold. I could just easily place a buy, put my stop loss here, and put my targets there. That would also be a good trade. Maybe 1:4, 1:5, something like that. But I like to, this is my own style of trading. Everybody, you have to define the style of trader you are. If you're interested in, if you're okay with that, this is also a very good trade, right? To trade like that. If you look at the daily chart here, so let me, if you look at the daily chart here, you'd see that we are in the bullish market. We're pulling back to tap into a previous leftover zone. And then we're looking for the continuation to take out previous, basically to take out previous high. So this is the high that we're targeting as liquidity. And you can, it's very, very, obviously very okay. If you're looking to take a trade like this, keep your stop loss below this low, and you go after this high like so. So in this one, your risk would be 99 pips, and you'll be looking to go after 448 pips. Now, if you're right, you definitely obviously want to use proper risk management. If you're right, you make about 1:4, 1:4.5 on this trade, right? So you can even get involved. I do that sometimes. I get involved with the test trades. So I'm not really interested in I'm not really down to committing a lot to this trade, but I could just leave a test trade, maybe 0.01 or 0.02 or something like that, something small. And then, put with a stop loss. And then, because sometimes, let's say when the market begins to move, you're not there to see it. That small one can take advantage, you could run and make small profits. And then if it goes your way and close you out, you don't make that much loss. The reason I like to personally watch for confirmation within areas is, well, it's possible. So let's say, let me take this area, for instance. Imagine I was looking to buy, right? I was looking to buy from here, and I just placed a pending order or something like that. And you can see how price came back down. Maybe it takes me out and then moves my way. So this way, this way, I'll just probably take unnecessary loss here. And because I'll have to use a big stop loss, maybe something like this, it would have cleared me out. Otherwise, if I wait for confirmation or take smaller trades within those areas, my risk is low. And then when price moves my way, my risk to reward ratio is much better, right? This is obviously because I I have time to look at the charts most of the times while I'm at work. I have my charts done. So, it favors my style of trading. You might prefer to trade the way I'm trading, but you don't have the time to do that. So you pick what works for you. Pick what works for you. And then that way, it fits into your system. So essentially, GBPNZD, I'm looking for buys. I'm looking for buys on this one, and I'm already currently looking for buys. Right now, I'm still looking for buy opportunity on this one, and to see if I'll get a setup that will enable me move price to this area. Now, there's obviously, with the understanding that this is the protected low, and if price breaks below that, we could begin to see this drop, in which case I'll probably switch and start looking for opportunity that fits the criteria, or just move away until this one begins to look more attractive. There's also something you need to learn, in the sense that, you might be, let's say I'm looking to buy this, and let's say price begins to break down and takes out this low. I don't need to instantly start looking for sell. I'll just probably wait unless I see a setup that fits my trading style, that meets my trading criteria, and then I get involved. Otherwise, I'll just move elsewhere, look at other instruments, and maybe find an opportunity that fits. And then maybe come back to this later, next week, next month, next 2 months, doesn't matter. Whenever I set up meets my criteria, then I'll look to trade it. I don't show up to, I show up every day to analyze the market. I don't show up to trade. When I open my system or I'm looking to, open the chart, I don't do that so that I will place a trade. I do that so that I would analyze. There's a difference with both of them. When you show up to trade, then you start to look for a trade. Everything would look like an opportunity to trade. You just have to take a trade. However, when you show up to analyze, you scan the market, and then if you find an opportunity that meets your criteria, you pull the trigger and you execute your trade. If you're wrong, well, you're wrong, but you know that you followed your rules. But when you're right, you would have more confidence in your system and you'd even make more money in the future. So basically, that's kind of like a way to look at this and approach this. And I think those are the instruments I wanted to talk about for our weekly market outlook class. There's some other pairs which the setup are still forming, and I'm not going to discuss that today. We'll leave that for our class tomorrow, our weekly market our 14 Edge Trading Room live classes. Okay, so sorry for the initial delay. I hope you guys enjoyed the class. Do let me know if you have questions. I'll just type them in the chat feature because this is what we're rounding up for today. Now, if you're watching this on the YouTube, please don't forget to leave a like, subscribe to the channel, and also leave comments there as well. I'll do well to respond and get feedback. So I like getting those feedback from you. Okay, so thank you everyone. Thank you everyone for joining in. This is our weekly market outlook class. Remember, always ensure you trade with proper risk management. That's the key. That's the holy grail to profitable trading. Ensure to trade with proper risk management. Don't be down for flipping account. Don't just be about, I want to flip an account. Yeah, it will work. Except now, if that's the kind of trader you are, very good, no problem. Stick with it. Just have rules around it. You can be very profitable trading that way. So, it's all down to you. However, don't just be. Most of the times, what I see is people they're just here, they're neither here nor there, and they keep wondering why they struggle. So, ensure to always use proper risk management. Define risk, accept risk, and then just eliminate risk. That way, you tend to become a much, much better trader. Okay, so remember, don't have a good day. Have a great day.